The pandemic has hit the country's revenue basket, denting government spending plans, a move that has seen Treasury move to borrow more than it had planned to bridge the deficit.
Levels are slightly elevated, but given the right mix and the strategy that we are currently undertaking, we are going to bring to a level in the long term, the medium term. We want to reduce on the size of budget deficit to make them more sustainable. The government is committed to a 2010 medium-term debt strategy, whose tenet is to shift towards concessional external borrowing with a view of lengthening the maturity period.
According to Treasury Cabinet Secretary Ukur Yatana, the pandemic shock presented challenges to Kenya's fiscal consolidation efforts, lowering tax revenue and increasing social vulnerabilities.
We also know cases where some heads of institutions, whether at the national county levels, they also come before Parliament. Out there, there's glaring evidence, but then, they come out when they're clean.
Kenya's recent robust growth, averaging 5.6% annually in 2015 to 2019, was associated with high levels of public expenditure, particularly capex. A lingering pandemic shock and fiscal consolidation could weigh on medium-term growth. This as the government is now considering whether to reverse its initial decision to participate in the G20's debt service suspension initiative.
Uptake of less treasury bills, but more of a treasury bond to give us space as and when they fall due.
Treasury says Kenya's external debt sustainability is within sustainable levels as a strong performer. The Public Finance Management Act 2012 sets the public debt ceiling currently at 9 trillion shillings. Of this amount, the disbursed and outstanding public debt stock stood at 7.12 trillion shillings. External debt standing at 3.66 trillion or 51% of total debt. Domestic debt at 3.46 trillion shillings or 49%. However, the debt burden is projected to decline over the medium term in line with the fiscal consolidation plan under implementation. The National Treasury says it will deploy debt refinancing techniques to lower the cost and risk in the debt portfolio and create additional fiscal space to lower the fiscal deficit. Linda Koskei, K24 Business.